Welcome to Life Planning 101, brought to you by Kennedy Financial Services of Eastland. Tune in every Monday morning at 8:30 on KATX and KWBY, and again on Saturday morning at 9 on KATX and KWBY as Angela Robinson joins Terry Slavens to share important financial information to help you live life on purpose. Insurance, investments, estate and tax planning, and much more. All covered now on Life Planning 101.
It is Life Planning 101 right here on KTX, KWBY. Terry Slavens with you, joined by Angela Kennedy Robinson. Angela.
Good Monday morning, all thawed out and ready to go.
Sunshine, 66 degrees today.
I know.
What a difference a week makes. So last Tuesday, -7 or so.
Yeah.
And yesterday we knocked on 70 degrees.
That's
Texas weather.
That's right. Well, we've been praying for all the people across Texas and really the Southeast in general. I know the storm moved out, and it definitely has affected a lot of people in different ways, and our prayers go out to the families that lost somebody during this time as well.
Absolutely.
But this is unprecedented. Obviously, we know that. Haven't we heard that word like a gazillion times over the last 2 years?
Everybody was so glad to see 2021 come.
Maybe we want 2020 back. Let's start over, right? But it definitely has us thinking.
Absolutely.
For sure. Yes. So I'm going to give you one more thing to think about today. Imagine that. Now, right here on Life Planning 101, and you'd get something to think about. But I want to tell you about a little boy that was walking down the road when a frog called out to him and said, "Boy, if you kiss me, I'm going to turn into a beautiful princess for you." And the boy picked up the frog, smiled at it, and he just stuck him in his pocket. A few minutes later, the frog said, "Boy, if you kiss me, I'll turn into that beautiful princess, and I'll stay with you for an entire week." The boy took the frog out of his pocket, smiled at it again, and just stuffed it right back in. And a few minutes later, the frog said, "Boy, if you kiss me, I'll turn into that beautiful princess, stay here for a week, and I'll do anything you want." The boy took the frog out of his pocket, smiled, and put it back. And finally, the frog said, "Boy, what is the matter with you? I've been telling you I'm going to turn into this beautiful princess, stay with you for a full week, do anything you want. What is the matter with you?" And the boy took out the frog from his pocket and said, "Look, I'm an engineering student. I have no time for a girlfriend, but a talking frog is cool." So you have no idea where I'm going with this today, do you? Yeah, it's going to be an interesting segue into the fact that this is actually a lot like your investments. There's always that frog looking to be kissed to turn into that beautiful princess. But time, nobody has the time for that, right? They can't wait that long. And unfortunately, a frog being turned into a beautiful princess doesn't just happen overnight. When it comes to your investments, it takes years and years and years and years and years to get all those warts off, right? But nobody has time for it. And the reason I bring this up, so have you heard anything about, GameStop or Bitcoin as of late? I mean, yeah.
You'd have to be on a deserted island with no news to have not heard about GameStop and Bitcoin.
Yeah, that's exactly right. Or what about, and I'm probably going to pronounce this right, Dogecoin or whatever they're calling it. So Elon Musk sends out some tweets to actually make fun of it, and it goes haywire in price. What is this about? What is going on? And there's been a lot of hype, and it's not just about that. You've got all these cryptocurrencies, right? You've got GameStop, the fiasco of that. Interest rates today, the markets are already in the red based on interest rates. In silver, you've been hearing a lot about silver, right? A lot has changed. So we think a lot has changed, yet there's that saying that the more things change, the more they
stay the same.
They stay the same. So what am I talking about? Cryptocurrency didn't even exist at the beginning of the millennium. Right? Isn't that hard to believe? I hate to watch these shows and go back to that time period and realize that really was 20 years ago, but it was. Oil prices went negative last year. That has never happened. We had a freeze in Texas that lasted so long, and we were below 20 degrees for days. That doesn't happen since apparently 1983, as you told me before the show, right? Not to mention that we're kind of stuck in the middle of a pandemic,
right?
If anybody's noticed that one as well. So what am I talking about? That the more things change, the more they stay the same. These are all true things that are really happening. And sometimes we forget to look at the basics for what they are. We get so caught up in the momentum of what's going on currently that we forget to go back to the basics. It's kind of like your body, if you think about it. I can stare at all of those desserts sitting out on the counter and all those donuts all day long and get super, super excited. But if I don't forget to go get water and eat some vegetables from occasion, I'm going to have some problems.
Absolutely.
Some big problems, right?
Big being the key word there.
Yeah, big being the key word. Well, your investments are no different than that. And what do I mean by that? So let's back up and do some investment education here, all right? I once got asked a question and said, well, isn't investing a little bit like gambling? And I said, well, I guess it depends on how you invest, but the answer is no. And why is it no? Well, when you gamble, is there an asset underneath that gambling? When you gamble, you're putting your money out there to own something or loan something?
Hopefully to receive something.
No, just to receive something, right? Well, when you invest, there's an asset there. And it might be an intangible asset, but there's an asset there. You're either owning something or you're loaning something. And there's a something, right? That is the primary difference from the two. And the goal of that, and if you actually you can go to Investopedia.com and look up the word investment. And the goal of that is to generate income or appreciation, right? We want it to produce income for us, or we want it to go up in value over time. And depending on what your goals are, right? And then there's a certain level of risk that's associated with that investment. Now, here's the thing about risk, and I was really disappointed in Investopedia when I looked it up, because I looked up the word investment, and you had to get halfway down the page before it actually mentioned the word risk. Well, I thought, how did they get away with that? Seriously, because, I mean, we're under scrutiny with FINRA and SEC all the time, right? So we have all these rules and regulations that we have to comply by. How do they get away with not, I mean, you have to scroll. Actually scroll, use your finger, you know, that thing you do on your phone, you know, move it up to see the word risk. And the reason I say that I'm shocked by that is because there is no such thing as an investment without risk. No such thing. Even when you go put your money in a savings account at the bank, there's risk. Now, how is that? How is there risk putting your money in something that safe that's quote unquote FDIC insured? Well, there's lots of types of risk out there. That's the bottom line. And we fail to look at those risks for what they are. We're just so hyped up about those, you know, apple fritters that are sitting on the counter. I'm going to sit here and make myself hungry, and I know they're going to have these dang things at the office when I show up. I'm going to have to avoid them, and I've got to stop talking about them, right? But we know that when something is shiny, we get attracted towards it, right?
Sure.
When something is glittering, whether it be Bitcoin or Dogecoin or silver or something's glittery out there, we're getting attracted to that. So what I want to talk about on the show today when we come back is we're actually going to explore the basics of the types of investments and the risk associated with each of those types of investments, particularly the ones that are all the hype today. Why do we want to do this? Because you got to have your vegetables and you got to have your water. Otherwise, if you just sit there and eat donuts with your money, that could be a very painful experience for you. So you don't want to miss this when we come back on Life Planning 101.
Segment 2, Life Planning 101. We're talking glittery stuff. We're talking apple fritters.
And Bitcoin. There is two types of people that meet in the investment markets. There's those with experience, and there's those with money. And towards the end of the day, they exchange their assets, and each of them go home. Right? So those with experience win out in the end. And what do I mean by that? So when we start getting calls almost on a daily basis about purchasing cryptocurrency, I know there's a problem. There's a big problem out there, right? And I'll tell anybody, it's not gambling, but it's going to be like gambling because we're not even sure that it's going to survive in the first place. But in the second place is that you have to realize currencies have a lot of risk inherently. And you may be thinking, well, what do you mean by that? I mean, I make my money in U.S. dollars and I spend my money in U.S. dollars. Well, if that goes away and there's cryptocurrency, what do you mean by that? And that's why I wanted to explore what we call the risk pyramid on the show, okay? Because I think we've gotten away from what risk really is and what types of investments have different types of risk. So if you're listening to the show and you are not driving, I would encourage you on your phone to go ahead and just pull up an investment risk pyramid. And you can just find one. There's thousands of images of one. If you don't have that, if you're subscribed to our newsletter, we'll be putting this out in our newsletter this week so you can see it. And if you're not subscribed, you go onto our website, www.kennedy-financial.com, and subscribe, because this is really good. And the point is the higher up the pyramid you go, the more risk you're taking with the increased potential for increase. Right? For capital appreciation. After all, that's what we're trying to do when we invest is either for things to grow or for them to make income, right? And then the further down the pyramid you go, you increase the risk of purchasing power. So what did I just say there? You increased risk of purchasing power, right? Because sometimes we forget that. We bury our cash in the backyard and we think it's safe. Well, you wake up 50 years later and it's worth only what?
The same as it was when you put it in there.
But not.
Oh,
if you go to the grocery store, how much more can you buy, or how much less can you buy, or what's going to happen there? I mean, I was literally on the way over here to listening to some analysts talk about these trillions of dollars that have been pumped into the market. We're seeing some inflationary pressures right now. Inflation could be a real thing. We talked about this on a show Aaron was on last month, where it's like you've got these two trains headed straight towards each other, right? You've got the train of inflation and you got the train of deflation, and which one's going to win? Because they're headed towards each other directly. And in the short term, we may experience some pretty painful inflation just because of what's going on with the spending right now, right? But over time, maybe we don't have such a bad inflation. But do we know that? No, we don't. Lots can change, right? So you may be, as you go down that pyramid, you're increasing the risk of your purchasing power, but you're also increasing the safety of the actual principal amount. So what's at the bottom of that pyramid? Well, at the bottom of that pyramid is where you have your savings bonds. It's where you have your USD insurance, your FDIC insurance, right? It's where you have your treasuries. It's where you have your insurance-based investments, fixed annuities, those types of things. That's all at the bottom of that pyramid. Very preserving, capital preservation. You don't hear it called low risk when you sign in an account form in our industry. Why? Because it's not necessarily low risk. It's just capital preserving. So then you start to go up. The next level, you've got your bonds. These are your high-grade municipal bonds that are in your county. They're building a new sports stadium, and you invest in that, right? Or your high-grade corporate bonds. You want to invest in Walmart's bonds, or your money market accounts, right? So a lot of people say, well, money markets, that should be on that bottom level. Maybe a time for another show, but realize that it isn't just the most capital preserving thing. So that's on your second thing. Then you move up a little bit more. And this is where you get into maybe some mutual funds or ETFs that are balanced. Maybe they have some high-grade stocks in them and maybe some high-grade bonds in them, but they're balanced, right? You have high-grade convertible securities where you can convert from a stock to a bond, or even high-grade preferred stock. So you want to be a preferred shareholder that gets paid before things go completely bankrupt, right?
Right.
A GM was a prime example of this when they did their whole reorganization. I think some of the preferred shareholders actually got some money out of that, where the common shareholders didn't. Common stock, that's the next level. You know about that. That's the S&P 500, the Dow, the NASDAQ, the Russell 3000. That's the little greens and reds you see come across that screen all day long, right? And now some of that is also small cap and mid cap, but these are some high-grade common stock. Then you get further up. We're keep climbing, okay? Again, and what we're climbing for is less asset preservation, more risk, but more potential return. Now, I want to ask you something. We just got to stock. The next thing we're getting to is limited partnerships in real estate. Okay? Real estate. It's above the stocks. Okay? So why is that? People say, well, that's a tangible thing. That shouldn't be there. Or limited partnerships, that would be like oil and gas plays or things like that. Why would that be above stock? Those are things I can touch and I can feel. Well, let me ask you this. Is it more safe to own a company like the size of Walmart that probably has a pretty stable outlook, right? Sure. Than to go buy a shopping center in Weatherford?
I'll take Walmart.
Okay, so that's why. There's your answer. So we forget this because we say, well, I can't touch that. I can't see it. I can't see how it's doing. But what did the pandemic do to shopping strips?
Shut a bunch of them down.
What did it do to Walmart?
Walmart's gone up.
Yeah, they were able to adjust, right?
Right.
They were able to make maneuvers because they're a company that has a product that we need. So is real estate necessarily something that we need all the time? Maybe, maybe not. Depends. How do you know when it depends? We don't know. A few years ago, the housing market was declining. Today, it's the best thing in the industry, right? When's that turn again? We don't know that, right? So we forget where this falls on this risk pyramid. But let's keep moving up because here's one thing I want to notice. Have I mentioned currencies yet?
No.
No, I haven't. Have I mentioned silver?
No.
No, I haven't. Have I mentioned hedging strategies, shorting stock like GameStop? Have I mentioned any of
No.
these things? No, I haven't. So apparently, those all have more risk than high-grade common stock, real estate, and limited partnerships.
Wow.
Wow. They're on the next level. Along with side by side, right next to each other, gold, silver, and collectibles are side by side with speculative common stocks and bonds. Speculative. Do you know what speculative means?
Yes.
Okay, so speculative, right? Wow. What is gold and silver advertised as all the time?
Safe.
Safe.
Yeah.
Safe. How the heck do they get away with that? I don't know. It still blows my mind. It makes me so mad. And when you see the commissions that these places make on these things, then you realize, oh, these people need to be in prison for what they're doing because it's wrong. They are playing on your emotions and they are telling you that our world is going to fall apart and we're going to go back to a gold-based currency. If it's not gold, and silver. And they got all these other reasons for silver, right? And that's why you have this whole run-up on silver. But let me ask you something. What the heck are you going to do with silver? What are you going to do with it? You going to build something with it?
Nope.
In the middle of winter, are you going to be able to thaw out your pipes with it?
Nope.
Because that's what I'm thinking about most right now. Is just, somebody said generator. I think those are probably going to be a good investment, right? Maybe it's too late. We don't know. But the reality is that we forget to look at risk for what it is. Are you getting my drift here?
Yes.
This is extremely important, and we forget it all the time. Have I brought up currency yet?
No.
No, I still haven't touched on currency. So here we are. Let me go back to this. We got high-grade common stock. We got real estate and limited partnerships above that. We have gold and silver and speculative common stocks and bonds above that. And then we get into futures, commodities, and currency.
At the very top.
No,
Nope.
we're not at the top, but we're the second to the top.
Okay.
I'm glad you asked that question. You know what's at the top?
What?
Vegas. Okay? So this is it's right below Vegas. Think about that. So we're talking about cryptocurrencies, and we're talking about the future, and do I need to be invested in that? And I'm investing in my future. Well, that better be money that you are ready to be like your Vegas money, because it could change like that.
Wow.
Yeah. When we come back on Life Planning 101, we're going to talk more about risk and return and what it is you really need to be doing in today's markets.
Final segment, Life Planning 101, right here on KTX KDY. Angela has all kinds of interesting tidbits of information to share with us.
Yes. Has investment risk changed? So if you've been listening to the last two segments of the show, what do you think the answer is?
Yes.
Has it changed?
Yes.
Yes, it's changed, but has it stayed the same?
Yes.
Yes, it has, right? And the reason that it's changed is it's changed because of our perception. But the reality is that it all has stayed within where it's supposed to be on that pyramid of risk and return. And we forget that commodities and futures and currencies right below Vegas money, right? And we forget that right below that is where gold and silver and speculative stocks are. And only then do we get down to real estate and then down to common stock and then down to some things that we know is kind of the core water and vegetables of our nutrition diet within our investment portfolio, right? So, what do you do about all this? What do you do about this hype? Well, I had a gentleman call me a few weeks ago and really dead set on buying some cryptocurrencies. And I just asked him, I said, well, how much are you willing to lose? And he said, what do you mean? And I said, well, anything that we allocate there, you just have got to realize that you got to be willing to lose it because it's speculative. This is some things that they could fall apart. I mean, these got all these cryptocurrencies kind of battling it out right now, in addition to the fact that We don't even know it's going to stay, if it's viable, right?
Sure.
So silver, I just started to tell you a story about a gentleman that we had that had gotten suckered into putting about $500,000 into gold several years ago. The premium on it was so big that by the time he went to sell it, it was down about 30%. And then the commissions to get it sold were going to be another 12%. And by the way, this was all IRA money. So it was all taxable too. And that's pretty painful,
Absolutely.
right? And so how do you liquidate gold if you need it? Question mark, cricket, right? And what are you going to do with it? I mean, that's the reality. If we don't fall apart, what are you going to do with gold? If we don't fall apart, what are you going to do with silver? Now, I'm not saying that these things don't have a place in your portfolio. They sure might. And they can at times. But should that be what you center your portfolio on, your investments on? And the answer is no. It should only be on what you're willing to risk to lose. So currencies fall below those Vegas funds. Silver, should you expect high returns and low risk? Is that what's advertised? High returns and low risk?
Should you expect that?
Yeah.
Probably not.
Yeah, probably not. But yet it's at the top of that pyramid, so you should get it, right? Yeah, but that's not what you get my gist here?
Yes.
This is pretty important stuff, yet we ignore it. And why do we ignore it? Because I'm going to tell you a little secret. All those people on TV advertise to you about two things. They either advertise to you to feed your greed, or they advertise to you to feed your fear. And they also know that the bigger of those two things, greed and fear, is fear. And when things are getting crazy, they're going to advertise more. And they're going to play to those fears more and more and more. And they're going to try to sucker you into something that seems an alternative and a safer way to do things, right? And it doesn't mean that it's a safer way to do things. It doesn't mean that so much has changed that nothing is the same. In fact, it's quite the opposite. As much as things change, things remain the same. Wow. So our advice is this. You got 3 steps, and you need to do it now. And why do we need to do it now? We got all-time highs in the market. We got a crazy interest rate market, right? And we got these crazy things happening. That means to me that things are probably overpriced and a correction is going to be coming. Now, I don't know when that correction is going to be. And it's not to say that we're not cautiously optimistic about what's going on out there, but it is to say that the correction is coming at some point.
It always does.
It always does. It always does. So here's your 3 steps. Number 1, get your risk right. Get your risk right. How much could your investments go down before you can't sleep at night? What's the dollar amount that you could have? You could wake up and look at your portfolio and you'd still be able to sleep at night.
Oh, I lost X number of dollars last night. I'm okay with that.
Yeah, that's exactly right. Or I've lost it in the last 3 months and I'm okay with that and hadn't come back yet. Because you don't lose anything until you sell it, by the way, or it goes bankrupt. Right? So get your risk right. And if you don't know how to do that, go onto our website, www.kennedy-financial.com, and we have a great tool. What's your risk score? It's that easy. It takes like 3 minutes to complete it. But that's the first step. Number 2, address your goals. Your investments need to proactively support your present situation, your future, and your goals. If you're just doing your investments without consideration of those things, it ain't going to work.
Right.
It's not going to work. And number 3, this is the most important. Stay the course. Stay the course. As much as things changed, you still need water. Every single day. Don't let that changing world tell you you don't need water. You are going to die. That's what will happen if you stop drinking water, right?
Yes.
So stay the course, because there's no such thing as an investment without risk. But the worst risk is really not understanding the risk that you have until it's too late. So get after it. We're here to help. My name is Angela Robinson with Kennedy Financial Services here in the great town of Eastland, Texas. God bless everyone. Thank you, God, for the warm weather, and pray for everyone's safety as we approach the end of this pandemic.
Thank you for joining us for Life Planning 101, brought to you by Kennedy Financial Services of Eastland. Tune in every Monday morning at 8:30 on KATX and KWBY, and again on Saturday morning at 9 o'clock on KATX and KWBY for more Life Planning 101.
Advisory services offered through Smart Money Group, LLC, a registered investment advisor. Securities offered through Calton & Associates Incorporated, member FINRA SIPC. Kennedy Financial Services Incorporated is an independent of Calton & Associates Incorporated and Smart Money Group, LLC.